Hey, good morning. Let's go over today's trade plan. So as we saw in the overnight session, ES failed to get above the 18.5 to 21.5 area, which was essentially the bull bear zone used in the overnight session. And we continued to see a lot of volatility, but overall downward selling pressure. And ES tested 85 quarter, which was our support zone down there. The recent lows are right in that area, and first test is attracting responsive buyers. But at this point, heading into the open, the sell side is still in control, and even though we have that primary support at 82 to 85, if this selling pressure just continues off the open, then there is still potential that we can retest that area and potentially even break it. I mean, it is a key support zone, so it is valid until broken. But if we continue to test that area during the day session, then eventually it could crack. And if it does crack, then we could get continued liquidation. Right now we're seeing very high volume in the overnight session. Typically that leads to a big range and big volatility, and we already saw that yesterday as well. So we're seeing that even the reactions that we're getting at the zones are quite volatile, and some pretty big bounces, pretty big retracements, so just be aware of that. But at this point, heading into the open, holding below this 96 to 97 zone would confirm the sellers in control, and the primary resistance is 2000 to 2002. So as long as we hold below those zones, we know that in the short term, the sellers can maintain control. And we can retest 82 to 85, which is the primary support on the day time frame. And on the downside, if we break 82 to 84, then we can get continued liquidation down into 72 to 74. May not get much of a reaction here, so have to be careful. And we're also going to have to look at the other markets because so far TF and NQ are holding up much better than the S&P. So, one possible scenario is that ES actually tests below 82 to 85. The other markets test their recent lows, which, for NQ would be near the 4,082 to roughly 4,100, that entire zone. And for TF, it would be a push down into that 47 to 50 area. And perhaps if those markets find buyers at their balanced lows, and ES is at a support zone, then we could still get a intraday reversal off of that zone. Now that could be 72 to 74 on the S&P, or 66 quarter to 68 quarter, have an open gap at 65. But those zones below can still attract responsive buyers, especially if the other markets are also testing their balance lows. But that's something that we'll have to time and gauge in real time. So if we do break 82 to 85, we could go down towards that 66 quarter, 68 quarter, open gap at 65, and then perhaps find some responsive buyers on first test of those zones. In the event of strong liquidation or heavy selling, the 52 quarter to 54 quarter area would be a range extreme, and again, eventually we could get a bigger bounce off of these zones. And on the day time frame, we are going to be watching the 82 to 85 to see if ES is able to hold below it. Because if we just poke below 82 to 85 and then immediately just come right back above, and we're rejecting the prices below 82 to 85, then that could also lead to a pretty decent short-term reversal. On the upside, 2000 to 2002 primary resistance. If we can break above that, that would signal a failed breakdown, and that would bring 1175 to 1375 and 18.5 to 20.5 into play. And sellers can still be active on first test of those zones, especially 18.5 to 20.5, and then we can start to balance within a wider range. If we take out 18.5 to 20.5, then the next main resistance area is really up at 28.75 to 30.75. And at this point it seems pretty far away, but we've seen that in this type of volatility, the market can put in a 40-point range, 50-point range. So we do have to be flexible and nimble on the day time frame, just because the range can be so wide that simply on the day time frame, you can get a pretty decent reversal or a pretty decent range extension, and you need to be prepared to basically handle that expanded volatility. But for now, the short-term bias is bearish, especially below this 95 to 97 area. And on the downside, again, 82 to 85 primary support. If we continue hammering at it, it could break, but it is the main support zone on the day time frame. And if it does crack, then we could see some continued liquidation. And so far, all signs are pointing to a retest of that zone in the RTH, and potentially a break of the zone for a test of some lower prices, and then perhaps we get a bigger bounce off of one of the support zones below. 72 to 74 could be it, 66 quarter, 68 quarter, open gap 65. Any of those zones can really put in a reversal and a bigger bounce. So we just have to gauge it in real time. We have to monitor the NYSE tick. We have to be aware of the the momentum that happens to be in play. Pay close attention to the real-time price action, because in these wide ranges, you can find opportunities in both directions. You don't have to simply be focused on one side, just because even the bounces and rotations that you're getting are, at this point, 8 to 10 points. So if you're using a 2 or 3 point stop, you can get 2 or 3 R out of just a reaction at a zone. Of course, the primary direction remains the sell side under 2000 or 2002, but you need to be aware of the volatility situation that we're in right now, and just understand that every zone can provide a decent reaction. And if you're looking to hold for a bigger move and everything looks bearish, then just be prepared again that you can get a short-term bounce that's 5 to 8 points, and you may have to sit through that if you want to really play for a bigger move. So all of these things you just need to be prepared for and aware of. And if you're aware of it, then you can handle it, and it's not at least a surprise, and you won't be blindsided by a move. So those are our main thoughts heading into the open. Let's see if the sell side is able to maintain control below 96, 97, 2000, 2002, and we'll take it from there.